welcome to another episode of LedgerCast. My name is Brian Krogsgaard, and I'm here as normal with Josh Olswich. Hey, Josh.
Hey, Brian.
We are back at it again. We're going to do a combination news and technicals episode. We talked ahead of time saying there was no news to discuss, and then here we are. We've found 4 or 5 things we want to talk about. But before we get to that, I guess why don't we do we don't normally do this, but I think it might give good insight. We're recording on January 24th. It's in the mid-morning, and the price of Bitcoin right now is just over 11,000. We're in a little bit of a decision period here, wouldn't you say, Josh?
Definitely.
And that's kind of the perspective we're coming at with this episode of the show. We're going to get into technicals today. We're going to talk about mean reversion, and what was the other term that you used?
Trend identification?
Oh, yeah, trend identification. Sorry, I'm blanking here. But before we get to that, let's talk about a few of the things that have been going on. Starting with, I think we might as well start with, let's do Bitfinex. Why not? Because they are enjoying lately adding coins to their platform, huh? It seems like highest bidder wins for their strategy. But they announced this morning another 1, 2, 3, 4, 5, 6, 7 or so coins. Do you know what any of these are?
That's what shocked me most. Like, I didn't recognize. I'm not like an altcoin extraordinaire like a lot of people are, but I didn't recognize most of those, and I didn't research them. I don't think they are above board, as they say. I don't really know how you get listed on Bitfinex and why you get listed on Bitfinex, but like you were saying, I agree. It's probably to the highest bidder. Like TRX, Rep, all those other ones I've never heard of.
Yeah. Tron or TRX is the one that I know the most out of these listings. I know RLC, RCN, Rep. I think there are an ELF. Maybe all of these, but I don't know what AID, or I know what AID is. I don't think AID has any listings or is on CoinMarketCap yet. Like, I think it just exited the ICO. So I would bet that one's going to get a lot of price action because this is its first major listing. I have no idea what Singles is or where it was traded. I think all the others were on Binance, at least. Another place where I've heard that at least if you want to get listed outside of the community listings function, then you have to pay up. But yeah, kind of a weird dichotomy for how to get coins on these platforms that doesn't seem particularly community motivated.
Well, it's a boom market for exchanges. You know, Bittrex clearing like 8 billion a day or whatever it is in volume. I think Bitfinex is seeing that and seeing dollar signs in their eyes with the fees. And Coinbase is the same way. They're eager to add whatever they want to add, and that's fine. I think it's better. The more exchanges things are on, the better, as long as the liquidity is there. When you get things like Binance, who are just leading the way for anything altcoin related, I haven't used the platform, but as far as onboarding users in the Asian markets, I think they're doing a really great job. Have you used Binance at all?
Yeah, I try to use the philosophy since I'm a decent percentage of my overall portfolio, if you will, is some stuff I actively trade. I don't like keep a whole ton of stuff in cold storage and whatnot, just because I started in 2017. So I'm actively trading most of what I hold, which is not what I recommend for most people, by the way. So for me to manage risk, the best way to do that is basically sprinkle it on several exchanges. So I've used Binance. I actually like it. I think it's fine. Its trading interface is really good. I haven't noticed too much downtime or anything, but most of all, what I've noticed with Binance is that the volume and volatility is much higher there than what it is on Bittrex, because Bittrex still hasn't opened up to new users, and I feel like it's really hurt it in terms of activity, and coins that are only on Bittrex or other platforms I think are hurting from that. So the Binance is definitely the hot place to trade right now. My thing I like about it the least is the lack of chart history on a lot of those new coins that are there. But if you can get past that, or if you're just trading 4-hour charts or something like that, then it can be pretty nice.
Yeah, I mean, between like the 10, 20 different exchanges, there are all these things that like I like and I don't like, and I've yet to find an exchange that I like everything about it. I like the futures aspect, so like the small leverage, 100x is a little crazy for me, but it works for some people. But overall, this is another, they mentioned it at the bottom of that tweet about Ethfinex, which I still don't really know what that's going to be.
I actually listened to a really good interview about it. I think they call it Ethfinex, but I could be wrong.
Okay.
The Eth versus ETH thing gets me. I really prefer like Eth because of Ethereum, but everybody calls it Ether or ETH, so I don't know. Potato, I guess. So the product manager of that was on another podcast, and we can link that up. I think it was ICO Alert. And the product manager for Ethfinex was talking about how they view it and its goal of being fully decentralized as an exchange and essentially supporting all tokens and then the future tokenization of non-tokens. And it seems like, yeah, I mean, it seems like Bitfinex is pretty focused on a decentralized future, but one of the things they talked about was being able to pull liquidity from Bitfinex and make it a part of Ethfinex, and also support 0x and anyone that's using 0x as a protocol layer for those relayers to essentially merge all these different liquidity pools and draw them together. So something like that, I feel like would really be a boon for decentralized exchanges in general.
Yeah, I mean, we have all these silos of liquidity that are literally like next to each other.
But if you pulled in, if you had one major centralized exchange essentially being willing to share their liquidity pool on decentralized exchanges, then that would be huge, you know?
Yeah. I mean, it's only a matter of time at this point before some sort of decentralized exchange that's able to gather liquidity in some way. There was like 5 to 10 different ICOs that are basically this, where they put in your order. You know, you put your order through them, and then they put the order on several different exchanges, depending on size and whatever. That's another interesting avenue to approach the problem.
Yeah. One of the things people talk about a lot with it, and I know we're digging in a little bit deeper than we expected, but I've been talking to people recently about the difference between on-chain versus off-chain or side-chain or whatever, and why you might use the Ethereum blockchain just for the contracts and settlement component, but then you essentially add the scalability layer, specific feature set for the decentralized exchange on your own blockchain or off-chain or whatever. Do you know anything technically in terms of like what's good or bad about that?
Well, Ether Delta is on-chain, right? Like everything.
Yeah, it's on-chain, and that's why it's slow. So
right, I can't imagine having everything on-chain. Like you have to pay gas for orders and stuff, I think, right?
Right. Yeah.
That just is a nightmare. I can't even, like, when the network is slow, the whole thing is bottlenecked. So that doesn't seem like a good idea at all. I do like having certain things on-chain, like you were saying, like settlement features. I don't know in regards to the ERC20 or ERC-XXX, whatever it is, tokens, how that works with listings in regards to like Ethfinex. Like, is that on chain as well? The exchange? Like, I don't know.
Yeah. So when ownership transfers for an ERC20 token, is that transfer instantly on the exchange? I don't think so. I would think that the exchange essentially kind of does some periodic on-chain representation of what happened either off-chain or on a different chain, right? I mean, that would be my guess, at least. I mean,
it makes sense that it's right, just like anything else. So they have their own ledger, and then they communicate with the blockchain somehow. I don't know.
Yeah, I've listened to two podcasts, other podcasts about this, where they were explaining some of this, and what I took from it was that they don't know yet.
Okay.
But I know you can trade in a beta mode on Ethfinex, and you can trade on like some Radar Relay and some of the other decentralized exchanges, block shares. There's lots of them.
Mm-hmm.
If you ever talk about them on Twitter, you get 25 responses with other options.
Yeah. So, especially now, I mean, you need like a Binance type marketing push for one of these decentralized exchanges, and then have a hack at the same time of a centralized exchange, and then it's just game over, because the use case is literally in front of your face at that point. You
previously said that you don't think this will be an overarching theme for 2018, even though you think people will be working on it throughout the year. I think I'm a little more bullish on timeline than you are, to feel like
decentralized exchanges.
Yeah, that we'll see something become relevant in 2018, I guess, would be what my goal would be.
Yeah, I mean, I'm connected with one that might work. I don't know. Like, there are plenty of options, like you said, but that's part of the problem. There are just too many options. There's nothing that really stands out above the noise. Maybe this does because it's connected with Bitfinex, but
yeah,
I don't know.
Anyway, so they added tokens, and then they may have some stuff coming out with Ethfinex. Apparently, they got announcements coming either this month or next month about opening this up some more or whatever. So we'll try to stay on top of that.
There's no lead time on any of those coins, right? That's just like the order book's now open, or is it like, I don't know how that works for them, because most of the time it's just like, these are now available, which is fine. Yeah. It works for, these offshoot tokens. I don't think it works for like Bitcoin Cash on Coinbase. I think there's a distinction there, definitely. Anyway.
Yeah, in terms of building the order book. In terms of people finding out about it, there are definitely ways that people get a little bit of advance notice on what's happening. I've seen evidence of that. And anyway, so you can't keep that stuff a secret forever, especially once you start making things live on the platform but unannounced.
Mm-hmm.
And that seems to be happening with Bitfinex regularly and Binance as well. So let's move into I guess we can talk about Bitcoin payments on the web, or fast Bitcoin payments, and how that affects things. This made the news a little bit the past couple days. Stripe is a very popular merchant payment provider. I use Stripe. They're kind of the middleman between like a website and Visa or whoever, Amex, people like that. And essentially they help create a secure transaction, because a web developer or someone that makes an e-commerce website, they're not going to do this well. So Stripe is the middleman in that. They're a ridiculously good company. And they announced yesterday they're ending Bitcoin support. And I am going to admit, so I use Stripe for my business, taking payment. I didn't even know they took Bitcoin.
That's hilarious.
Yeah. And for most websites, like you can integrate Stripe directly, but you can also use like some form of extension that blends your e-commerce platform with Stripe. So like then they may not accept Bitcoin. So this was probably a really tiny percentage of overall Stripe usage. Wasn't really a huge deal, but they wrote a blog post that got a lot of attention in both of my worlds, the web world and then the crypto space, about being bad for Bitcoin. They pretty heavily referenced the transaction fees and the uncertainty of how much things cost and whatnot as reasons. They also, for one reason or another, noted other things out there: Lightning, Omisgo, Stellar, which they have, I think they own something like $4 billion worth of Stellar because they did a seed funding round years ago. And they even mentioned Bitcoin Cash and Litecoin, which are technologically no different really than Bitcoin, except for they aren't used as much, so they don't have as high of transaction fees. This made a lot of people talk. You mentioned that you just don't care, and I think I'm with you, but why don't you care?
Mainly because any business trying to use Bitcoin on the first layer shouldn't ever expect things to go great. Just because unless they're using, at this point, unless they're using Lightning, with the way the transaction fee market structure has worked out, it's not ready for prime time scaling wise, just period. Any blockchain isn't ready for prime time. Look at Ethereum with CryptoKitties. I mean, nothing can handle the volume that they want to handle if it ever took off. And like you said, this is probably a very small fraction of their total overall
microscopic
usage. So I don't even know why it granted a blog post like that, other than to promote
fun
other
press
stuff and press.
It gets us talking about Stripe on our podcast. I mean,
right. Press like this now is like press in 2013, 2014 when they said they were adding it. Like it's the same effect. It's the same thing with Microsoft. Like I don't know if Microsoft is still accepting it through their store or not. I thought they dropped it. It's like Steam dropping Bitcoin.
Yeah.
Like I don't care. Like doesn't matter to me. It doesn't affect me. I never use Steam Bitcoin payments. Like great. Like is it bad for Bitcoin? I don't think it's bad for Bitcoin at all. I think most people
not based on how they implemented it.
Right. Were people like I've spent Bitcoin all the time, mainly because I don't care and I don't make money other ways generally. So I have no other choice. But I just don't see it as a big deal overall.
Yeah. I don't see it as a big deal given, what they were doing and therefore it wasn't an appropriate solution. I do think being able to process payments with Bitcoin would be a big deal. So like being able to do so scalably, of course, like that should be our big fundamental news cycle for 2018. Like if or 2019, whenever, if Bitcoin does kind of basically shut up altcoins that say we're scaling where Bitcoin couldn't. In reality, when you talk about the transactions per second that are required for true scale, no crypto can scale. So if that can be solved so that cryptocurrencies can properly be used for payments at massive scale, like Visa scale, MasterCard scale, big payment provider scale, that is a big deal. And along the same timeline of Stripe saying they were ending support, Blockstream did a post talking about how they're starting to roll out Lightning Charge, which is essentially a group of tools through the web to be able to take payments using Bitcoin, but with the added element that Lightning would be facilitating those payments. I was excited about this news because this relates much more closely to my professional world. So I do web development stuff. I specialize in the WordPress world. So their first working application of this is on a WooCommerce extension, which is e-commerce with WordPress. So WooCommerce is used on like probably 30 to 40% of all e-commerce stores, but it's very long tail. So like if you look at the top 10,000 e-commerce stores, WooCommerce doesn't have 40% of the market, but the long tail is on WooCommerce. So essentially, because it's open source software, they could create a gateway of using Lightning on e-commerce websites. So now if I start to take payment on my website, I can use something like this and take it in Bitcoin, which I'm really, really excited about. I'm actually going to try to use this as soon as possible. So these are basically competing news items for the same use case.
Sure. It's like the LN directly disintermediates any payment network, in my opinion, because you don't need Stripe. If people know how to use Bitcoin, they don't need Stripe, right?
But Bitcoin is hard to use.
Right. So when we get there, if we ever do, buy Stripe, buy whoever else in the payment layer, the financial system. The other part of this is, anytime anybody talks about fees, it's like when BitPay said they're limiting to $100 transactions or something. Are they using SegWit? And then what are they doing after they take the Bitcoin? On that side, I think there are even more questions. like Gift. What does Gift do when they take this Bitcoin? Do they sell it? Do they hold it? Do they, borrow it out? I don't know. Like, because there are ways you can make that money back, if anything. Not that I'm like in a Bitcoin business, but I'd imagine there are plenty of stuff that they can do in that regard.
Yeah, I'm not real sure. I mean, I just know that for crypto people, I could put an option that says pay with crypto and it's not going to freak anybody out. But even this user experience of like, here is your whatever, your transaction ID and your QR code, like this is not exciting from a user experience perspective. And that's to be expected. I think so you mentioned Stripe not being necessary. I think something like Stripe could probably still play a role in a crypto payments world of providing the interface to operate with this kind of ecosystem. Part of what makes them.
If I can pay with a picture and a QR code versus putting in all my information, if you don't have to, there are some instances where you have to. If you're getting sent something shipped, you need your address generally. But if I could just pay with a QR code, I don't care what I use, but it doesn't matter to me.
Yeah, but there still may be additional information to just taking payment, like receipt of goods and certain personal information that is assigned with all of that. That's been one of my concerns with taking crypto for stuff. It's like sometimes I'm just like, if I say I was to charge people $100, for education or whatever, if I'm to take crypto without a decent tool, I got to have like a spreadsheet or something and be like, hey, send me your screenshot and transaction ID so that I can know that was you that sent me money. So there's definitely a tooling layer that will aid in all of this. But either way, like I just thought it was funny ending Bitcoin support from Stripe and then adding Bitcoin support specifically with the example of e-commerce from the Lightning Network side by side. And I actually saw that Lightning like tweeted at Stripe and was like, hey, we can help you with this.
And like we mentioned about their seed funding in Stellar, maybe there's some bias there. I don't know. I'm just speculating.
I don't really think so. I know Stripe pretty well. I've followed them for years. And I think that was just one of those things where they probably made an incubator investment years ago and were kind of like, okay. And then because of the crypto surge, it became an outsized part of their overall valuation or whatever. But I kind of doubt that it was like some, really thought out thing in terms of mentioning Stellar versus any of these other options.
Right. But the fee issue with Bitcoin, they had to have known that it wasn't going to last forever, considering they've been in this for a while.
Sure. When they added this, I mean, I know other businesses on the web that accepted Bitcoin too, like WordPress.com, and they no longer do. A lot of them did it because they were just nerds into crypto in 2013, 2014. So they were like, hey, let's do this. And it was a lot different ecosystem than it is now. So, you didn't pay $100 in 2014 when you were sending.
Yeah.
So I don't think there's any reason to get like all up in arms about it, which I saw a decent amount of. So I thought it was worth discussing.
I saw a lot of like normie press about it, mainstream media press.
Oh yeah.
Just like unbelievable, like maybe 50 articles about specifically Stripe. It's like the Steam thing, the same thing.
Mm-hmm.
Just the press that piles on that sort of thing is interesting.
Yeah, Stripe's a little bit of a tech darling too. So like you get a whole slew of tech websites that are going to pay attention to that. I had at least 5 personal friends like link it to me like, this means like Bitcoin's probably dead or something.
Well, that's the other thing. It gets the clicks, right? Because crypto is like a hot thing to talk about right now.
Yeah, so. They were like, this is a big deal. And I'm like, okay. Anyway, on to more important news. 50 Cent has $8.5 million worth of Bitcoin. How do you feel about that, Josh?
I feel like that's close to the amount of money he's ever made in his life. I don't know.
I bet he's made more than that.
I don't know. I mean, that's a lot of money to just like show up,
Yeah.
So apparently he took Bitcoin for album sales a while back.
Mm-hmm. In 2014, he was early.
It's funny that he got that much I didn't realize it was even that much. 700 BTC. That's huge.
Yeah, so he got 700 BTC. At the time, it was $400,000 worth for the album they put out. Man, he was a big deal, and still is. But he forgot about it basically. So fortunately, he didn't lose access to it. But he recently did, I think it was an Instagram post and a tweet or something, basically talking about how he's got millions of dollars worth of Bitcoin now, which I thought was hilarious.
Funny.
So yeah, 50 Cent is a crypto whale of sorts now. We'll see if he gets into the market manipulation game now. We can probably see him on an ICO soon enough. That's for sure.
Oh, for sure. Yeah, definitely. Yeah. So Weiss, I'm not familiar with Weiss because I'm not in like financial mainstream again. Whatever.
Yeah, I had to pause the video. CNBC with their autoplay videos killing me.
That's okay. Yeah, so apparently they rated like 25-ish. I didn't see the full list. I assume that was the full list that I saw. Basically giving everything a C, giving Bitcoin a B-, I think.
I think Bitcoin got a C.
Oh, it did? Okay.
I think Ethereum and EOS got Bs. Yeah. OMG. Yeah.
So I don't know who these people are. I don't know who they think they are. Reading my Bitcoin as C+. It's silly, right? I mean, you and I could make a much better system. I think that's just a poor system overall. There needs to be like a multi-point analysis. And I don't know what they did for their analysis, how they used it, the data points, where they got the data from. I think they were only using like 1 year out on data as well. So, Ethereum outperformed Bitcoin percentage-wise last year. And like Steam getting a B-, please.
Yeah.
Anyway, just like
it's an absurdity.
It triggered me, Brian.
it's an absurdity for sure.
It's cool that they made an effort though. Like I applaud them for that, but I wouldn't take it seriously,
Yeah, they are reputable, at least in the sense of the financial world. Of course, I can't find the screenshot that was most popular, but basically they gave Bitcoin a bad rating and they gave other things decent ratings, and it's kind of hard to figure out why. So, but they did. Another more. This is probably a PR firm at doing their job well more than anything.
It got them clicks. Their website was down when I looked at it initially.
Nice.
It might still be down. I don't know.
Yeah. So,
but cool.
Just another thing out there today.
Useless for people who know better, but dangerous for people who don't, because they're going to go to that and say, "Oh, I can buy blah 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 on blah blah blah," and this is a good idea. Anyway,
I'm not sure if it's a subtle troll or not, but the announcement said this was written from Palm Beach, Florida. So more not related, but gives me the same gross feeling. And then finally, this is more of, you can call it pricing conspiracy theory stuff. The Chicago Mercantile Exchange, CME, the big futures provider, they are closing contracts on Friday, I believe. So I thought we'd just address people who think that CME came into crypto and shorted the top and plan to long it as contracts expire on Friday. I've been hearing.
Is it a monthly contract?
Yeah, I think so. Something like that.
I thought it was, but I also saw that they had something else. I don't know. That information is not easy for me to find because I checked.
I'll look that up while maybe you talk about what you think in terms of can people using CME to short, can they manipulate the regular markets as well, and how might they go about that?
Yeah, so you can say like, oh, these institutional investors are coming in, they're longing spot or whatever, and then they're shorting with the hedge on the cash settled future, and that's causing price to go down, I guess.
Yeah, so they have to be in the regular market in addition to CME. So like they would have gotten into, and a lot of hedge funds did. They got into Bitcoin sometime in 2017 or whatever through
through necessity,
routes.
might I add. Necessity, because it was outperforming everything they were able to touch. So not being on some sort of Bitcoin exchange or platform or whatever, OTC, you're like setting yourself apart from those hedge funds that are.
Yeah, and of course, some of these, some institutions can't do that. Like they don't have the flexibility. But private hedge funds, or I don't know, subsidiaries of some institutions, they figured out ways to get into Bitcoin ahead of time. So the theory is people bought up and helped run up Bitcoin's price leading up to December 17th when these launched, and now they've been essentially dumping Bitcoin for profit leading into these shorts. Now they're going to make a profit on the shorts, and then they'll all conspire together to flip that when these short contracts end, and they'll flip them back into longs, and we'll continue the party this weekend or whatever. I have no idea if that's true or not. It seems complicated.
I mean, we needed a pullback anyway. The pullback was coming. I don't think this could have gone on much longer. You know, when we're seeing things like we were seeing on Coinbase, where it was literally going up thousands of dollars over of like a 5-minute period. This is when it would hit like 19,000. That's a signal that there's going to be some sort of pullback because that's unsustainable. And that wasn't even a order book issue as much as it was just people, just mania, you know.
Right. So you wrote an article on this topic calling it a healthy pullback. What specifically did you want to offer as, I guess, some takeaways from the article that you wrote?
Sure. So the first half was mainly talking about the fees and the issues with that. And I'm hammering this any chance I get because it's a counter narrative to the falsehoods of the Bitcoin Cash crowd and or anyone else doubting what's going on, as well as the Lightning Network coming online finally, which is interesting. I think that'll take some time. I don't think it'll explode up throughout 2018. I think by 2019, 2020, we'll see the effect take place more so than it is now. So yeah, there's the fees, the Lightning Network. And then basically the trend, getting to trend identification into technicals. Everything still looks okay on the trend wise. All of this pullback was basically just returning to mean of the trend through several different metrics.
And that's what we're going to talk about today in terms of our primary trading topic is mean reversion and trend analysis.
Right.
Why don't you start with just, well, one, bear trend versus bull trend. You're just getting a snapshot of what we're in, right? So I guess that depends on time frame, right? So how do you, when you're looking at something, how do you determine bear, bull, whatever?
So typically the market's doing one of three things. It's either going up, going down, or sideways, right? That's
right.
Very basic analysis. And generally the trend is your friend. So you don't want to be counter trading the trend. You can certainly do that on a lower time frame. But very clearly since 2015, we've gone up consistently. So how do you mathematically look at that? Immediately you use the 200 moving average on the daily. That's the gold standard. So does price respect that level? Yes, it's respected that level 5, 6, 7 times at this point. It keeps bouncing a little higher than the 200 exactly. But as we approach the 200, that's when you start to consider the bull trend ending. So if we next week start closing below the 200 for the first time since 2015, then you can say to yourself, all right, well, maybe I need to start looking for shorts or exits at this point if I haven't already.
Why is the 200 significant on a daily time frame? Is it just because it's an industry standard, or is there something else at play there?
From what I can tell, it's an industry standard, and more important to me is that it's been respected. 5, 6, 7 times at this point. Every single drop has immediately pulled up from the 200, or the 200 is held. And you'll see that on the way down too. It doesn't have to be the 200. It can be whatever you want it to be. I don't care. But it's like people call it curve fitting, but I don't like that term. You're just seeing what works. Like what's worked in the past. Yes, it doesn't always predict the future, but it works until it doesn't. So the 200 is the gold standard for trend determination. So if it's above the 200, it's bullish. Below, it's bearish. That's the first thing. Just super basic that you can look at to figure out where we are.
We had the downtrend from through 2015. October of 2015, the price pushed above the 200 daily EMA. We've been there ever since. There's been maybe one spike below that on a daily time frame, and that was this the
Bitfinex hack?
The Bitfinex hack. So a huge fundamental event that caused a spike. So meaning, like you just said, there should be buyers. If we hit the 200, if we spike down to the 200, which right now is not what, 8,800?
Mm-hmm. Something like that.
Yeah, so if we spike down to the 200, we should see enormous amounts of buying. And if we don't, that's what you would consider bearish in terms of we could see a lot deeper correction, right?
Right. Not even immediately. As far as closing below the 200, I think it'll need a few candles, but it hasn't stayed below the 200 since the trend. So if it does, that's a sign. Okay.
Yeah.
At least for me. I don't know.
Now, what about if you apply the same methodology to the doubled Ichimoku cloud? From what I checked out, this is pretty much the longest we've spent below the cloud since the bull run started.
Yeah, it is definitely.
Can that be a similar indicator, which would say that we're already essentially satisfying some of those metrics of bearishness or bear potential?
It could be. So for me, in my mind, the daily 200 is the same as the weekly Kijun.
Okay. So you don't consider the daily Ichimoku quite as powerful as a daily 200 or weekly Kijun?
It's definitely powerful, but when I'm looking at trend, like overall trend, because on the daily, the price has snaked in and out of the cloud a few times. It's TK recrossed a few times. But on the weekly doubled, it's just like the 200 in that respect. It's never closed below the Kijun. It's bounced 5, 6, 7 times at this point at that level.
Mm-hmm. But what we have seen is 2 weeks in a row now where we've touched the weekly Kijun, and don't think we've done that before. So we're showing, if nothing else, we're showing probably the bull trend's greatest test to date in the last 2 years, right?
For sure. Am I nervous? I'm a little nervous. I'm not going to lie. But you just have to look at that and say, we're basically at support. So do you sell support? Generally, I don't. Maybe other people do. But that's the other thing when you're looking at using these high time frame trend identifiers, mean reversion points. This is all support here. So I don't know. Like if you didn't sell 19, 17, 16, 15, 14, 1300, 13,000 rather, you sell 10,000 before it breaks support?
Because the question is, you either sell when it's high and take your profits, or now if there is a correction, people like to point to the only real bear market we've had, and the idea of a bear market meaning you lose 80 to 90% from the top. Well, Bitcoin's already lost 50% from the top, or more, a little more than 50%. If you count all the way to the lows, like if you sold the bottom at 9,100 or whatever, you sold for more than a 50% loss off the top. So if the overall correction is 80%, then you can improve your price by selling now if we confirm a bear market. If we don't confirm a bear market, then you're in trouble, right? Because you essentially sold right before the pullback up to retest the top.
Yeah, and I think 10K is a huge psychological support as well. So,
yeah, we haven't yet had a daily close below 10K or even really teasing it too much that I've seen. Maybe we had one below 9,500, but I don't think so.
Other than the weekly Kijun, there's not a lot of like technical support for 10K, but I think the psychological, I'm going to place bids around whole even numbers is there. The cloud on the daily isn't fully bearish. It's halfway there.
I'm missing one check mark, right?
Well, if the cloud was bear and the lagging span was below the cloud, that's the other thing. So that's going to take a month probably for all those to hit. But the daily did tell you to get out on that down candle right before the edge-to-edge trade.
Yeah. So essentially when the TK bear cross happened, that same day was when the edge-to-edge trade happened. You had to be paying attention like we talked about in the last episode. Right. If you're only making moves at the end of the day, then your first chance to get out would have been the Tinkin retest, basically, which would have been around 13,000, which we hit a few days after that. So if you were convinced of a bear and you missed selling on the breakdown from around 14,000, you had a chance to sell at 13,000, and at this point, people should basically be trying to figure out where they feel they are in the market. So that brings us to trend analysis. Where do we go from here, I guess, is the next question. Like, how are you looking at this and saying, well, I think this or that? Are you looking at high time frame and low time frame? Are you paying closer attention to low time frames now than you used to, or that you normally do? How are you approaching that?
Sure. So there's a few things going on. I think if we go any lower, we're going to pull back up to the Kijun before it goes insane. So if we do break that wick at 88 or whatever, it hit 9K. The Kijun price will continually try to get back to that. So either it's going to go sideways after it drops, or it drops and then goes back up quickly. That's one thing, just on the daily. The other thing is there's a pattern there. It's either a falling wedge or some sort of shape that is reminiscent of a flag on the daily. So there's that. You're also looking at another W-type bottom. There's actually a bull div on that W. If you turn on RSI or volume, you'll see it. Even Stoke. So any oscillator, I saw it.
Which well time frame?
I think it was on the daily.
Okay.
So that says there's weakness in the bearish momentum. That's what it's telling me. Because it went lower in price, but the momentum wasn't there. So there's all that. And there's also the pitchfork, which depending on how you draw it, it's near the edge of the pitchfork. I don't know.
On the bottom side of the pitchfork.
Yeah.
And again, with the pitchfork, just like anything else that you're drawing, it depends on how you draw it and where you anchor it and all that kind of stuff. So there's the possibility that this wedge. So with a wedge, the price is narrowing within some sort of trend. So a falling wedge, the price is going down, but it's also narrowing in terms of how much it ranges from top to bottom. I have that drawn. If you combine that with a prior large breakout around 8,500, and then also this kind of, what do you call that? Like a order block or
tweezer bottom order block.
Yeah. That happened in late November. That kind of establishes another zone of support that's thus far been respected with wicks. That's between 9 and 10,000 basically. That was again like where we did a bunch of ranging, and like what turned out as daily, they look just like daily indecision candles, but it was really like a big hot mess of volatility, if you remember trading those days. So that's essentially being respected now in terms of daily closes. And that's kind of what leads us into this. So those should be support. And when you draw like where this falling wedge, where it concludes, essentially goes back to those areas. Prior guest, Johnny Moe, also drew a fib from the, it may not be this one, either the summer lows to 1800 or the fall. Yeah, I think it was this one. So from the September drop to 3,000 up to the top around 20,000, we've also hit the 0.618 fib, which I thought was pretty funny. And all this stuff just tends to work together. And I guess this all sort of fits into the concept of mean reversion. So when you talk about mean reversion, how does that differ from trend analysis?
So trend analysis is it going up or down, and the mean reversion is how far away from the expected up or down is it going. So where's the middle of that up or down? And we were way overbought based on the mean. Just if you look at distance from the 200, distance from the Kijun on the weekly, daily, RSI might have been, there might have been a bear div. I think there's a bear div there in like December 1st to December 11th, something like, yeah, right there. We got a higher high on less bullish momentum. So there was a bear div there. All that was in play at the time. And now since then, it's just basically been sideways down. So if you're trying to play leverage, which I did, you're just going to get chopped up. These spiky, if you go to lower time frames and see how spiky this is, it's really tough. These ranges are just brutal on leverage right now. So if you're doing well on leverage, I can applaud you, because I am not at the moment.
Yeah, I'm surviving. I'm not making money yet.
Yeah.
So
it's not something I want to be trading, just looking at a position of price relative to the daily cloud, but go ahead.
One of the situations people might be in right now is maybe they sold somewhere, let's say like 14,000 when it broke down. Maybe someone did a great job and they sold closer to the top, 18 to 20,000. And they've just been looking at this whole range and trying to say, when do I get back in? When is it safe, or can I catch the bottom? How do you look at these trends, some of the stuff we've talked about, and determine like these are good times to do that? And to what degree, I guess? One is just going from cash back to Bitcoin. Another would be, like you said, if people are trading on margin.
So I'm in as much as I want to be based on the first drop. So as far as getting in more on leverage, I'd be waiting for things like the Adam Eve that we didn't yet mention, but which is another double bottom. That's actually, we're looking like it's going to survive. We'll see. So it's a V and then a U, and you'll see the U pull up to the horizontal resistance, which is essentially the horizontal of the flag that broke down. So the levels make sense as far as if it needs to break where. That's when I want to get back in on margin, when I see that.
Yeah. The current Adam and Eve is really interesting to me because completing it requires breaking a diagonal trend line that goes back to the beginning of this. So this 11,000 to 12,000 range, 11 to 11.5, really 11.5, is a significant spot, because completing the Adam and Eve requires that you break through it, and that's also a diagonal breakout. What's the difference in strength between diagonal and horizontal levels to you? My understanding, most people respect horizontal levels considerably more than diagonal, but what kind of weight would you give a diagonal level like this?
Almost nothing. Just because the pattern is there. Like patterns are so powerful and work so well
even
that,
before it's complete, because to complete this has to go through that diagonal, right? So
yeah, and patterns even work better than the cloud, honestly. Like most of the time when the cloud is showing you an entry, it's because there was a pattern first. So like on the 12-hour, you'll see a Kumo twist where this Adam Eve might complete. So,
and a Kumo twist is a location for possible volatility.
Right. So Kumo twist is a place where there's no support or resistance necessarily, and should momentum exist, it can just pull up through that. So it's like a few days out, but it's also February 1st on that Kumo twist. So like depending on how slow this V/U forms, it might just go diagonally up.
Can you also describe when you have an Adam and Eve? I see it described, at least on, I think, the pattern site or whatever that is, the concept of a handle on an Adam and Eve, or like how you do a retest on a double bottom or Adam and Eve. How does that work, and does it mean very much to you?
Yeah, it doesn't always have to immediately take off. Like if you turn on volume and you look at the volume, I'm pretty sure it's descending volume profile there. Mm-hmm. So it may sit at the horizontal for a few days until volume comes in. It may go sideways up until volume comes in. But until volume confirms the horizontal break, that's what you'd be looking for the entry.
Yeah, so the dump from 14,000, we had a huge increase in volume. And for the most part, we've been on a relatively steady decrease since then.
The other thing I like about the 12-hour is that the exit on that is dead on. Right before, you didn't get the 16K exit, but you did get a 14K plus exit on that TK cross. Yeah,
about 14.5 or so. And you could get it, you didn't have to get it on the same candle. And the 12-hour also, it showed two indecision candles right before the big red candle. So as you saw the T and the K narrowing, you were getting these whatever indecision candles, small body, and small, even decreasing wick size on those before the two big 12-hour dump candles. So yeah, you got it out around 14.5. I think a lot of people got tricked by, some are calling it a bull trap already. Kind of the next hump, the next run that we had to 17,000. Do you have any strategy for how you play that type of thing? Or maybe even better question is, how does that also relate, I guess, to the mean reversion concepts that we've been talking about?
Yeah. So I think I got trapped in there too. I wasn't looking at the things I needed to be looking at, like the cloud. Like clearly the cloud there is screaming to you, the bearish TK cross occurred days before that pull up. So when you see that, either the price is going to go sideways, return to the Kijun, and wait for the bullish TK cross. Like it does this over and over again. You'll see it. Or it just keeps pulling back. So that's never a good entry when you see the TK cross like that. So that's one thing. And the mean reversion thing, so the Kijun was flat there. So it's unlikely to just keep going beyond that.
I see another thing on this chart. I have two questions. I want to talk about something I specifically see on the Bitcoin 12-hour chart. Okay. But before we do that, I've seen a ton of this. I get a ton of questions about it as well, where people say, I don't want to miss out on like some big breakout. So one of the great things about mean reversion and breakouts is retests. So do you play typically the breakout or the retest? And what do you there's a case for the retest, of course, there, right?
Yeah, I mean that's what any person in their right mind would have done, other than the fact that the TK cross wasn't bullish. Like this is completely in the weeds of cloud at this point, but
well, retests happen on anything. So if you break through a moving average, you will typically get a retest on the other side of the moving average where you can sell. It's like you don't, unless you're on margin and you get destroyed by the breakdown, You can get rid of the asset and go to fiat. If you're playing an alt pair, you can go to Bitcoin, whatever. You can still make that move on the transition retest. So like when you go to the other side of the moving average or to the other side of the Keynesian or whatever, like it's drawn to go right back to that and at least retest it.
Correct. Yeah. I
agree. Someone could have done that here. The interesting thing on the 12-hour is that when it broke below the Keynesian, the TK cross happened in a bearish way. The retest actually blew through everything on the rebound. So it was pretty tricky in how it did that, but you didn't get the bullish twist. And this is a doubled cloud, so it's slower. So like a lot of people might look at this and say, oh, well, it'll get there. It's just not caught up because it's going too slow, which is a nice little trap to get you in, right?
Yeah.
That takes me into, go ahead.
It also bounced down from the cloud on that wick on the W we're currently in. Yeah,
it did. So the current Adam and Eve that we're looking at on the 12-hour, right, it slammed into the bottom of a flat cloud. This is another one of the reasons I like using double clouds that you pioneered in our space. Thank you, Josh. Is these flat Kumos really give you nice targets for where the price might go, even if they're not always even if a doubled cloud's not always the best entry indicator. And I think we've discussed that on a previous episode.
Mm-hmm.
On this W bottom that we're looking at, something else I'm seeing on the 12-hour I want to get your opinion on. I also get questions about this pretty frequently. It looks like we may be looking at a C-clamp of sorts, where, first of all, tell me if you think I'm right or wrong, and then we'll explain what it is.
I don't think you're wrong. I just don't think it's big enough to like be super meaningful.
Okay. Well, why don't we instead then just talk about what it is and we can describe what might occur here?
Sure. So it's basically like when you see EMAs separate. So it's showing you that price is either overbought or oversold. In this case,
when they separate, just means the velocity was really fast, right?
Right. So the averages couldn't catch up with each other, basically. Of one, so the Kijun's slower. It's always going to stay sort of where it is until like the previous 30, 60, whatever it is, candles catch up with the movement, and or the current candles go lower. So there's some factors there in play. But so the C clamp would be the distance between the T and the K lines. And
it looks like a crazy professor's whiteboard on my computer, right? So the difference between the Tinkin and the Keynesian, and it's got this certain C clamp look.
Right. So when it goes down really fast or up really fast and then it goes sideways, that's telling you it's not likely to be continuation there. It's likely to pull back. And that's almost always confirmed by the C clamp shape. So you can see it went down really quick, then returned to the Kijun / cloud and then pulled back again. But it hasn't made a lower low, basically, and which is what the cloud's always also telling you there.
And the result of this, what degree does the flat Keynesian play into that? Does a flat Keynesian attract attention as strongly as a flat cloud?
I'd say yes. Flat anything is telling you the market is ranging and the average is right there. That's where the mean is. Price is likely to test that over and over again.
And the 12-hour Keynesian right now is also roughly the completion of the Adam and Eve. Interesting enough.
And even after that, the previous flat Kijun at like 15.3 or whatever it is, that's also a horizontal level.
That's another future target.
Right.
I've seen you talk about this before. I've used it on some targets with altcoins because they love to be so ridiculous.
Mm-hmm.
Let's look at a more bullish scenario and talk a little bit about like cloud ledges. I'm going to pull up the XLM stellar chart. We were talking about it earlier. So how does the left side of the cloud, or the left side influence the right side in some of these scenarios?
So anything flat ever is always going to be a level. that's saying that there was a 50% level there previously, so it's going to be almost always a level going forward. In that case, kind of, sort of. But the longer it is, the more you should pay attention to it.
I'll show you the one that I was referencing. On Stellar, it had previously, last May, this ridiculous 3 or 4 day run, which in the future, and you'll see this on future alts, that's why this is worth mentioning. You're going to see it on all of these alts that have gone on these crazy runs over the past couple of months, like Tron or something. It'll create clouds like this. It created this massive daily cloud that then we essentially never tackled until the cloud shrunk all the way to nothing and twisted, and then that's when the bull run started again. So that almost helps establish a potential market cycle for what you could expect with some of these, because it's just they need more time to cool off and chill and go back to zero or go back to the initial relative Bitcoin price before they can run again. And I like the XLM or Stellar chart because it shows precisely that pretty much. After that mega spike, it took 6-8 months before the daily cloud shrunk enough before the price could work its way through it. And it pretty much ripped right through it as soon as it twisted. And that's what started the run until now. And when I was looking at this one, I sold too early, it turned out, but I was looking at these ledges that the cloud created as my targets, kind of peaking around 2,400.
Oh, that's exactly what I would have done.
So what it's showing us now is it's establishing one. It went to new highs, and it's consolidating up here. It's even running a little bit at new levels. So like this is well beyond the expectations of last time. So when people ask me about like what are my targets for an altcoin when it has no prior history, I'm like, I don't know. It's way overbought in the way that I look at it, because historically, relative to the Bitcoin value, and Bitcoin is way more expensive now than it was. Like it's extremely expensive. If I looked at this on the dollar chart, it would be absurd. So eventually, this will return to the mean again. So we can talk about these returns to the mean, not just in Bitcoin versus the dollar, but like we're looking at altcoins versus Bitcoin. A lot of these ones that have gone on these big runs between December and now, they're probably going to find their way back down, right?
I'd think so.
So is there any difference when you talk about return to the mean for the way these operate compared to the way we've just been talking about with Bitcoin?
I don't think so. I mean, look at all the Kijun stabs there. Like that's pretty beautiful. There's 2, 4, almost 6, roundabout. There's 2 Tenkin plus 4 Kijun stabs on that. And that's super spiky, and it still manages to respect those levels.
Pretty impressive.
Yeah, this isn't something that I would want to look at on this time frame. Is it like if you're not in it already?
Right.
But your target for anything is always going to be return to the all-time high. So, if I was in it and I was like looking for something as far as the level is concerned, your target's all-time high and 1.618 fib extension every single time.
I think it'd be fun to use one more example when we talk about possible targets and returning to the mean.
I've been looking at that because there's a C clamp there. There's also like
so this is a better example. We're looking at Ethereum now. So this is a better example of a C clamp where the price moved. So Ethereum went all the way down to like 0.025. That was kind of the height of Bitcoin relative price depression. And then 4x'd to 0.1. That's there's technical reasons why that was resistance, but it looks more psychological to me. But now the price is way above the Tenkin, way above the Kijun. It can cut in half almost to hit the Kijun. And so it's an interesting one. What were you going to expound on with that?
So there's a few things. Whenever I see the C clamp like that, I will never go long at that level, especially if it's on the daily. if we're looking, I don't know what the RSI shows, but it can certainly go higher. It doesn't mean it can't. But when I'm seeing something like that, it tells me that it needs to cool off a lot before things happen. So it'll either go sideways and the Kijun will catch up and it'll get a bearish TK cross, or it'll just come right back down to the Kijun. It's least likely to keep going at this point, based on what I'm seeing.
Yeah, no, that makes sense.
But there's also like some weird cup and handle situation there, which is loose, but I don't know. Overall, I think it needs to cool off. You can see there were several other times. The previous highs in like March and June, there were C-clamp type things there too, where it needed to come back down.
Yeah, and it didn't necessarily mean forever type of down. And honestly, it could, based on what I'm looking at least, depending on what Bitcoin does and if Ethereum correlates, it looks to me like maybe it could actually run from here and create even greater separation. This is, of course, the last big Ethereum run that went from whatever $7 to 400. It did that several times where it just obliterated everything that makes sense and ran for it. So it's not that it has to go down, but technically it looks like it wants to return to the mean. So
right. So where do I want to get in? I don't want to get in here. I want to get in at 0.6, 0.58 or 0.59 or 0.65, whatever that is on the Kijun.
Right.
There.
But if you're already in, it doesn't necessarily mean you get out right now, right?
No, but I'd be looking at the 4 hour at this point if I'm already in. So if you look at the 4 hour, the B bands are really tight on that. I don't know I haven't looked at it recently, but they were really tight the other day.
I think they still are.
Yeah. And it's kind of hugging the cloud too.
Yeah, so it's setting up a possible edge-to-edge trade down with the cloud, and the Bollinger Bands are incredibly tight. So something's going to happen with Ethereum. At
least on the ratio.
Mm-hmm. Yeah, the Ethereum BTC ratio. Again, with shout out to Johnny here. I'm turning more stuff on, not turning them off. He pointed, I think, to last June with this edge-to-edge setup as when it dumped, yeah. So in June, it did a very similar 4 hour thing that it's doing now.
Mm-hmm.
And then it dumped down into the edge-to-edge, and that started the downtrend versus BTC. So Ethereum is in a precarious position. Doesn't mean it's done. It even teased before that in May. Ooh, that was brutal. Did something similar, spiked down, and then immediately spiked up and went on a new run. So
if I'm long there, I have tight stops. If I'm not in, I have bids low. And that's pretty much it for that. But I wouldn't expect it to keep going just based on the high time frame being oversold like that.
So people always need to be paying attention to this concept of mean reversion when they're trading, because the price wants to return to that. It's these laws of averages and whatnot. And these are all lagging indicators. So what are some of we'll kind of close off with this. What are some of the scenarios where it throws out these lagging indicators out the window? I guess there's some fundamental reasons why that might be so, huh?
What do you mean lagging indicators specifically?
Well, so like why it wouldn't respect a lagging indicator. Like if you have huge fundamental news, then it may take a long time to start to respect those lagging indicators to the degree that it could essentially the indicators catch up to the fundamental basis for price movement. So like Ethereum's big run last time, people saying this is fundamentally based would say it's because of its power as a smart contracts platform and its adoption in that way, right?
Mm-hmm.
So over time the indicators kind of catch up with the price. So that's the whole concept of them being lagging. But barring big fundamental news, then your return to the mean is even more a powerful concept.
Yeah, and even during that ICO mania. It's still pulled back to the mean several times. There was a giant candle in March 18th. There's a massive down candle on that. So that's why I'm pro TA over FA, fundamental stuff.
We do have a couple of quick questions, and that leads directly into one. Does Bitcoin price movement, this is Veritas Quotient, does Bitcoin price movement invalidate altcoin technical analysis?
That's a good question.
Thoughts, opinions, desires?
Does Bitcoin's price action invalidate TA? I think it echoes each other, honestly. It's kind of like when you're looking at the Forex pairs. Like, they don't all happen in a vacuum. So if, like, the Dixie, the US dollar index, is going up or down, it's going to affect everything else proportionally. Just like Bitcoin's kind of the standard, it's going to affect everything else usually relatively the same. I mean, there's obviously variations from day to day. Certain alts go up and certain ones go down. But it doesn't help if you're like looking at Confluence, like, okay, let's take this ETH BTC example. I think ETH BTC is going to go down. I think Bitcoin's going to go up. That makes sense because just based on the ratios, but that doesn't have to happen.
Yeah. One of the things I'm personally looking for right now is, one, I'm becoming a bigger and bigger believer in the correlation is related to velocity, not related to up or down action. Because to me, a healthy Bitcoin massively impacts a healthy altcoin market. So we actually saw great price action while Bitcoin was doing the initial correction from 20,000 because everybody expected that. You know, it was a known thing. But now it's like, is Bitcoin dying? So then you saw from the dump from 14,000, that affected altcoins drastically as well. And that was both high velocity and people being concerned that money will just leave the crypto environment. So to me, Bitcoin does affect TA. I even tweeted, I think yesterday, that I'm really not paying a ton of attention to alts from a charting perspective, because if Bitcoin goes bear, which would be that move below the 200 like you talked about, or whatever you want to indicate, if it sustains below the daily cloud, to me, those things are important to essentially reject right now. So my personal working opinion is that if Bitcoin starts to go up, if it breaks this downtrend, that could actually create one of these beautiful moments where Bitcoin and altcoins both go up. I don't know how long that would sustain, because if Bitcoin moves back into an uptrend, once it breaks all-time high especially, it could go pretty quickly, and that could then essentially be a situation where everyone hitches their wagon onto Bitcoin and goes for the ride to 30,000 or whatever else. So to me, that's the opportunities that I see for altcoins would be going up against Bitcoin, even though when Bitcoin's going up, because you're essentially interested in the health of the overall ecosystem. But that has its limits, you know. So especially once Bitcoin, if it breaks all-time highs, I think Bitcoin's going to be the train you want to be on for a little bit there.
Yeah, I wouldn't count on everything moving together immediately. Like, some of it might happen, but like we saw with Ethereum and LTC, typically there's like this liquidity swing that goes around when, you know, Bitcoin goes sideways, then it pumps Litecoin, and then it pumps Ethereum or whatever. Like, it's been like that since I started, and I don't think that's going to change.
Yeah. When I talk about that, I mean, like, I don't mean immediate time frame. I mean,
yeah,
my alts I'm holding alts now. And my fear is if Bitcoin goes down. My fear is not if Bitcoin goes up. I'll put it that way. And they could go down a little bit while Bitcoin reacts violently at first, but I think they would catch up somewhere between now and all-time high pricing, and then even outpace Bitcoin. That's why I hold them. I don't hold alts unless I want to outpace Bitcoin.
Right.
That, speaking of, and we'll finish here because we don't really have time for many questions. Relmaster Coin says, how are you splitting up your portfolio in times like these? So what's in your bags, Josh?
Mainly Bitcoin. It depends I'm holding ZRX because I think it's going to get added to Coinbase. So I'm just going to hold that. It's going to be like my Ripple position that I held for way too long and eventually got rewarded. I don't care about the ZRX chart at all. I just know that there are a bunch of people who keep shilling it over and over again. And
like me, because it's my biggest bag.
Like you and me. I think there's enough happening with that eventually. So stuff like that is like separate from like the portfolio, as far as I'm concerned. That's just in a whole other ball.
It's a different portfolio. It's not like your primary.
Right. Like that's the long, like 6 to 12 month out stuff. I'm not even concerned about that. Everything else for me is pretty much in Bitcoin, other than stuff that I hold. Like I'll just buy and hold like the top 10 for a month and see what happens, and then rebalance it.
You just do that periodically, or?
I started 2-3 months ago doing something like that. So some of like my trading stuff is just holding that just blindly, just passive.
That sounds terrifying to me.
It's, well, you don't have to think about it. That's the thing. Like you only have to think about it at the end of the month. But anything I'm trading, I'm not holding any alts right now. It's all about Bitcoin or cash for me. I don't know. What are you? You're spread out like you always are, right?
Yep. I'm. So I think of it this way. I went through the hard times holding a lot of alts, and therefore a little pain while Bitcoin's finding itself, I can live through as well. My previous move was really dumb through most of the fall. Like obviously I would have been better off buying alts like at the beginning of December. However, December and really the majority of January too have paid off very well to make it worth it on the whole, earning relative to Bitcoin. I personally don't think we're done with that yet, just when I look at market cycles. So I am still in the majority of my altcoin positions. I have been consolidating into fewer positions so that I can make faster reactions. That's been important for me. One, if Bitcoin goes bear, alts will probably, I think, go even more bear. And
yeah, I think that unwind. If Bitcoin unwinds below 10K, I think alts are going to start disappearing. Honestly,
yeah. So I want to be in fundamentally sound coins if Bitcoin goes bear, whether that's Bitcoin or maybe a select handful of others. Right now, or like through most of December and beginning of January, I was fine holding something just because of the chart, but when you get punished, its fundamentals can come into play a little more. Now, anything can get punished though. So, I would say I have close to 80-85% altcoins, which is a lot. I don't recommend it. I would recommend 50% Bitcoin for most people if I was giving financial advice, which I'm not.
Yeah.
But for me, within those altcoins, again, it's a large distribution towards the top. So like the ones that I hold the most of, is not that many coins. And then I've got a sprinkling of, I don't know, like 10 or 15 that have small amounts in them that are just kind of either long-term or small caps or fun bags. I don't know, whatever you want to call them. I do not recommend what I'm doing as like what someone else should do, purely because one, what I'm doing takes active management, and two, it's not very smart. So it's not a de-risked situation. But the way I looked at the whole crypto market is the money that I have in crypto is for a risky investment. And I'm taking the risky path with that. And that gives me an opportunity for greater gains. But it also gives me greater risk to where, both relative to Bitcoin and relative to the dollar, I can lose it. So for me, it ends up in large shifts in total portfolio value because of the volatility that I see in the market. Only time will tell if I'm being really stupid or not. If I get away with it, then I look like a genius. So we'll see. That's my portfolio. Once Bitcoin's ready to run, I'm going to be almost completely in Bitcoin. Like if I'm in anything else, it'll probably be scalp plays. I'm at least going to learn that lesson.
Yeah, I think volume for everything's going to be huge. I'm just looking at this volume on Coinbase for ETHUSD, and it's like the market maker left for Christmas and New Year's and hasn't come back. It's not necessarily the market maker, could be like the community environment as a whole, but volume's definitely just like an eighth of what it was throughout November and December. So just really something to watch. If volume picks up in one direction or the other, and things will start get exciting again.
Cool. Do you have a coin of the week? I don't think I do. We can skip that segment if you want.
Oh, I don't think I have one. There's just not much going on for me.
All right.
It's some alts happening, but
yeah, there's there's some really interesting alts movement right now. We Trust is one that I think it's announcement based, but one of my larger altcoins that's been doing really well the past couple of days. So the whole market is not scared, but I would say a lot of the market, especially large caps, are really not moving a whole lot right now, essentially waiting on Bitcoin's direction. So that's why I think right now the smart thing to do for people would be to focus on Bitcoin and what's happening there. Be prepared to react depending on your risk profile, or maybe just get comfortable. If we go bear, the best option might just be hodl. And I say hodl. Do you say hodl or hodl?
I just say hold, because I don't want people who don't know what I'm saying to think I'm crazy. So
I get like twitchy when I hear people say hodl, because you say hold, not, so hodl to me makes more sense. Anyway, I think we should just sign off, Josh. This is like super long.
Yeah, that's okay. It's chock full of value.
Chock full of value. You got your money's worth of $0 on this episode.
That's right.
Follow Josh on Twitter at Carpe Noctem. Read everything he writes. It's the best TA on the internet. I'll say it for you because I agree.
Thank you.
Brave new coin. YouTube videos. Josh has been still pumping out YouTube videos.
Yeah, sometimes.
I might be putting out another one. I think I only did half of my Q&A when I did Q&A last time, so I might do another one. And then go to ledgerstatus.com/learn to sign up if you want to dig into stuff, want somebody to hold your hand a little more. If you want to do your own research, Josh wrote a really great, really long Medium article with the TA tools he uses. You probably, if you think you can understand that and then know how to act on it, you really probably don't need what I'm looking to teach. But if you want to get more in-depth explanations, get some community elements, some other stuff, then the program that I'm putting together might be informative for you. So check that out, and we'll catch y'all next time.
Monuments crumble